Hey, Mike here. I want to do a video update with you about the gold market because we just had a Federal Reserve Day and some interesting things happen in the financial markets. Often on Federal Reserve Days, there's all kinds of wild gyrations that can take place. For example, the Dow and the NASDAQ and the S&P gapped up a whole lot on the open, and then they went in the red. And then the S&P went green after the Fed meeting and it went in the red again. So you get all kinds of wild intraday volatility. And what happened on the open, or right before the open, was that the U.S. government reported second quarter GDP numbers that were above expectations. They showed a 4% growth rate. In the last quarter, it was like a shrinkage of 2.9%. So people were really happy with that news and they gapped the market up. Well, at the same time, they made gold prices drop. Now, that took me by surprise because last month, on the 18th, on the Fed day, gold prices actually surged higher, even after the Fed reduced its quantitative easing program. Today, something else happened. Let me show you and why it's an interesting tip-off, even though it didn't do exactly what I thought. So, on the open, that news came out about the economy and gold. This is the HUI Gold Stock Index. As you know, it's got big resistance at 250. We'll look at that in a minute, but that's where the stage 1 base is. But here's the thing. That news came out, and gold itself went down to almost $12.90 an ounce. And it was like at $13.10 just yesterday. So that was like a 20-point drop off the high. And the HUI went down on the open and bottomed out, and then after the Fed decision, it bounced back up. I think the GDX either managed to close in the green or at least went in the green. Anyway, here's what here's the thing. Okay, this is the bottom line. Why I'm really doing this video for you. I get emails every morning from a lot of people read my emails, right? And I get emails every single morning from somebody somewhere. It's always someone different telling me gold's going to crash because it's either they think it's being manipulated, so it can never go up again. Well, why? How did it go up in 2009 and 2003 and all these other years? It all go up. Or they say the economy's booming and the Fed and blah 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 and all this, and the U.S. stock market's going to go up forever, and so gold's no good. Here's the thing, though. These predictions have been proven wrong over and over and over again. Every day I get these things, and there's no crash going on. There's no crash that's going to happen. We're in the transition into a brand new bull market. And don't take your eye off that fact. Why can I be so sure of that? Because I've been messing around with gold and gold stocks, trading them, now investing heavily in them for 12 years. And there's one relationship that's been a reliable indicator of the trend, whether that trend is going to change or continue. And that is the relationship between the mining stocks and the metal itself. The gold stocks tend to lead the action in the metal. That means when the gold stocks are acting stronger than the metal, that's a positive. So on rallies, you want to see gold stocks go up more than the price of gold, and then when gold declines, the opposite. And this is exactly what's been going on since May. This is the relative strength index of the HUI divided by gold. It's in a powerful uptrend. Here's the price of GLD I've got below that. Now, notice what's happened over the past 2 weeks. GLD, which tracks gold, has been trading a little weak, right? In fact, it made a new low below this low just the other day. The gold stocks, though, didn't do that. The HUI Gold Stock Index has support at 235. It's held support. And today, when gold went down to around 1290, the HUI just went down a point or two, and then started to go back up. So it hasn't even tested support, while gold did, and the relative strength is still on track and still powerful. This suggests to me that it's only a matter of time. It could be tomorrow, it could be a week. I can't predict the exact hour, but at some point, the gold stocks are going to break out. And here's the thing, this 245 has now become the short-term resistance on the HUI. It's about 27 on GDX ETF, the gold stock ETF. And once this goes above 245, I really think that's the real resistance, and then it's just going to be not much to clear 250, which is the resistance going back all year. But I just want you to see this relative strength is still on track, despite, you know, the little drop we saw this morning. It's still hanging in there very strong, and that suggests to me the breakout is still on track to happen, and I have no doubt about that. Let's look at the daily chart so you can see this is hourly. So we're really focusing on the short-term action, which I don't really do that often, but I feel like I had to today because it's what everyone is worried about right now, is short-term. So here we are, the HUI. You can see the daily chart. 245 is basically resistance. 235 is support, and we've held support while gold broke support just the other day and bounced back up. This is a nice consolidation off of the big rally we saw from June to the July top. A nice consolidation pause, digesting that gain, giving a chance for the weak people to get out and for people that are day trading or whatever to jump out and take their profits. And once that profit taking is done and the weak hands are gone, it's off to the races. We'll be going through 245 and taking off like a rocket. Now let's look at the past year, and you can see why the 250 level is so important. Here's 250. 250 acted as resistance, 250 is resistance, 250 is resistance. It's also the point of the upper 200-day Bollinger Band, you can see right there. And if we go back for 3 years, the picture becomes even more clear that we're in a stage 1 base, and 245 is now the number. Close below that, we're attacking 250. In my view, the bull market is here. So that's why I've been averaging into mining stocks, is I want to get in before the liftoff takes place, because I want to be riding that rocket, looking at the window and just enjoying my view. And there's going to be a lot of people that climb on as the rocket lifts off. That's fine, they'll get on, but I got the comfortable seat. You know, if you want to climb on and hang on, you're going to be able to do that too. But I know it's more stressful for people to hang on when they get in as things lift off. So I like getting in something like this as the process, as the transition is entering the completion. So here we are. This is the daily chart. Just want to give you this update and keep your eye on the HUI. Now watch 245. And remember, 250 is the ultimate level. If you want to be 100% sure before you do any more purchases yourself or buy a new position, you can wait for that 250 level. It's just a few percent higher than 245 or where we are right now for that matter. So this is what's going on, and I'll be talking to you later.